Welcome to Season 2 of Fintechs a podcast by the one and only policy shop for Canada's fintech scene. I'm Alex, and I'll be your host. Join me as I talk to the people who are making a big difference in the lives of Canadians. Today, our guest is Andrew Moor, the CEO of EQ Bank. In this episode, we talk about the state of Canadian banking, how the Basel Accord may be steering us in the wrong direction, and how to promote more competition in Canada's financial sector. Andrew, thank you for joining us today.
Great to be here, Alex. It's just great to talk to the fintech community for sure.
So one of the recurring themes on this podcast, in the association's work, in the fintech community that is concerned with public policy, of course, is competition in banking or the lack thereof, depending on whom you ask. I always like to kind of check this assumption because I never take it for granted that the world is the way people say it is. There are dozens of banks in Canada. Econometric measures of competition paint a bit of a mixed picture, though the offerings of our biggest banks look pretty much the same, which some might say is the product of collusion. You could also argue that they're the same precisely because of how competitive the market is. Maybe the products are commoditized, and so you can't really deviate from the market competitive price without losing customers. So tell me, in spite of all these counter arguments, why do you think there is a competition problem in banking?
I think it's clearly way too much concentration amongst the big six banks in Canada. More than 90% of the deposits held in that group. So as you say, these smaller banks, but don't tend to be particularly relevant to the overall scheme of things. So I think it depends a little bit on how you define banking. Frankly, that's the starting problem. And if I'm defining banking as the core business of taking deposits and then lending out money on the other side, which I think is really the core function of the banking system, that part seems a bit uncompetitive. And what we're finding is obviously some of the members of Fintechs Canada are chipping away at some things around the edge, kind of like payments, things, maybe some things around wealth that some might regard as banking products, but aren't really part of that core banking transfer between people, say, that have more senior in age, that have now got savings and want to deposit them in the bank to be lent out to, say, younger people setting up businesses, that kind of thing. That part, I believe, is pretty uncompetitive. In fact, there's evidence of that is that the returns on equity for the personal commercial banks in Canada, that some of the highest returns on equity in the world, which would suggest that those are pretty uncompetitive markets. Although econometricians do apply all sorts of complicated metrics to try and figure that out. But I certainly think there's some when you think about things like fees being paid on foreign exchange, fees generally being paid on bank accounts, cost of moving money generally from banking system. I would say compared to what I see in other markets, it looks like there's small capitalistic power here that allows economic rents to be charged that probably shouldn't be in an optimal way.
You have banks like federally regulated banks and fintech companies that feel like banks but actually aren't banks and partner with banks who power their services behind the scenes. Why is there so much hope that these fintechs, with their partner banks behind the scenes, are going to be the ones to wrestle control away from Canada's big five banks rather than other banks and credit unions that are vying for the customer relationship?
Well, I think it all comes down to the regulatory tension of the system, right? So the big banks have been granted enormous regulatory advantage compared to the smaller banks. So they use something called AIRB to risk weight their assets. And they basically have had their liabilities fully, through having the DSIB designation, have had their liabilities fully guaranteed, where the smaller institutions have to put more capital up against their lending assets for the very same types of assets. And they basically have to rely on CDIC insurance to give the kind of comfort to the borrower, that to the investor, that the savings are money good. So that makes it a bit challenging for smaller banks. Fintechs, on the other hand, are, generally they might be under provincial regulation, or they're much more lightly regulated, don't need that prudential capital, so can have a bit more fleet of foot to operate kind of in the area that's generally banking, but probably not in that core area I was talking about around taking a deposit and then lending out the money. They can be part of the value chain, but they can't actually hold both sides of the balance sheet. So they do have a bit more flexibility, a bit more regulatory advantage possibly, and also sort of hampered compared to the DSIBs, who have some enormous regulatory advantages being handed to them.
A little later in this conversation, I will definitely ask you about how prudential regulation contributes to this problem. But before I do, um, EQ has some good partnerships with fintech companies, but EQ, to me anyway, looks like it's very much vying for the customer and not merely trying to support others silently behind the scenes. Um, of all the banks, including the control freaks who want to do everything in-house, to the ones who power fintech companies behind the scenes more as kind of silent partners. You have banks like EQ that fit on neither pole. Why is EQ's strategy a winning one here, in your view?
I know that we don't know lots of things about lots of details around various markets that fintechs can tackle. If you've got an executive team that's totally focused on trying to solve a particular problem, as our partner at Borrowwell is trying to think about, free credit scores and the value there. We were one of the founding investors at Borrowwell. We're close to Andrew Moor and his team there. As Wise has done with the social money transfers, people are thinking about that all day long while we're thinking about, taking deposits in Canada, moving money in Canada, making mortgage loans in Canada. It really all comes down to that specialization, as we see in many other markets. Like, used to go to the Bay to go and buy things. Now I don't go to the Bay. I always go to a specialist, right? So I think it's just the nature of the specialist, the ability to really focus on solving the customer need in that particular part of the financial services marketplace. It gives the fintechs the advantage in those areas. And then if we can partner with them and offer the same advantage to our clients and share the economics with that fintech, then clearly we bring somebody to the market that's innovative and original. And we know, I think one of the things is we know we're relatively small in the overall scheme of things. So we can't invent it here. I think if you sit inside a big institution, you can say, well, why can't we do whatever that fintech's doing? But actually, it's quite hard to be that innovative, give enough authority to an executive to pull all the pieces together to really think that through and get through the compliance function and so on. So it's actually quite hard for those big banks to do it too. But intellectually, we come from it, that we know through entrepreneurs out there, they've got better ideas around various segments of the financial services marketplace than we do, and we're happy to partner.
You guys have attributed some of your success to your fintech mindset. Is what you described what a fintech mindset is, or is it something else?
I think a lot of it's that focus. We boast about being a SaaS bank living in the cloud. If you're a fintech, you say, what's that? I mean, of course you are. Why wouldn't you be, right? And actually, we're the first bank in Canada, that did that. So banks, the idea of a nimble entrepreneurial bank is a bit of an oxymoron, frankly. Like, we've got so much regulatory pressure on us that, yes, we want to have some of those elements, but we spend most of our time, an awful lot of our time, worrying about some of those elements. A fintech can be totally focused on providing optimal solution for whatever problem they're trying to solve. And so, we're trying to, we think we're pretty good at solving certain types of problems that we're focused on. And that, our MEQ Bank platform, the ability to open up sub-accounts, do foreign exchange at good rates, move money, and then we could provide an integration to Wise if we want to send money outside of Canada, for example. So it's a good example of, you don't want to be that last mile. We kind of possibly think that we can address that across many countries. So it all makes sense to partner with people that are really spending their time thinking about different problems than we are.
The control freaks who try to do everything in-house, which, as you said, is challenging no matter how big you are. Do they do this because they sincerely think they can do better than what's out there? Or is there some other reason why they choose to do so much in-house?
I think there's a bit of that. I think the other challenge is actually working with fintechs, particularly the kind of more embryonic ideas. They may be a great idea, but we've got these obligations as things like third-party risk management, making sure that you are getting what you expected. Have you got cybersecurity controls in place and so on to deal with, to bring these kinds of companies into your ecosystem? So I think there is part of that. Part of the mindset is I can't afford to take the risk of really tying up with a fintech. I need to try and build it myself in-house, where I can sort of look at every element of how the sausage was made. But I think it's, obviously if you're working with a large institution, you're trying to create a job for yourself as well. So it's sort of, your default position might be build it ourselves rather than actually think that somebody else can be better at it than you are. I don't think that's true when you get more to top of the house in the banks. They recognize it's hard to do that within a large institution. But of course, there are many competing voices, and so that's That's where you often end up.
Given that it's hard to do everything in-house, and even if you try, I mean, you might not do it as well as how others do it out there. Um, wh why aren't more Canadians looking at I mean, what I'll just describe for the sake of simplicity as, like, mediocrity. Why aren't they looking at that? You know, we have big 5 banks, products are the same, they do a lot in-house. Maybe it's not great. Like, why aren't these Canadians switching?
Well, certainly one of the things the big banks are doing quite well to prevent us seeking competitive solutions is allowing new things to flourish, right? I mean, the open banking, I've been making the same speech about open banking for 6 years. I hardly need to amend the script. You know, nothing's changed in 6 years. That would open up competition. The real-time rail's been taken over by the big bank agenda so that we won't have an open payment system. Payments will still be very expensive in Canada, out of big banks into other places. So part of it is kind of like, you know, the anti-competitive behavior, frankly, has sort of left us in this spot. The other thing is you know, the big banks have had a financial supermarket approach, right? So it's quite a lot easier if you've got, say, your securities you're investing in with somebody, the discount broker at a bank. You've got your everyday banking account there. You've got your credit card there. You know, in some ways, life is simpler that way, right? Because there's sort of closed wall with these archaic payment systems we have in Canada. You know, arguably, you know, you can certainly argue that it's actually easier to have it all in one spot. It's not great that that's the way it is, but they have a walled garden approach, and people could you know, choose to operate within that walled garden. You know, what we tried to bring to life with the levy campaign. This is Eugene and Dan Levy that we had running on TV ads. Many people still bank with where their parents took them into bank when they were teenagers because the you know the perceived cost of switching and time involved in switching is too high. I think, to be clear, that is breaking down. That's changing for sure. But it's a long road. There's clearly the people that we call in our marketing mindset aspirates that are trying to improve their lives and kind of busy trying to shop for financial services, and so we're having good success with some groups. But the vast bulk of Canadians still banking with these more traditional institutions, and not being aggressive enough. It might be about exploring what other options are available.
How much better does a product or a service from an alternative provider need to be to justify the cost of switching? And think of this as a question to kind of get at, like, what is the cost of switching really today?
Yeah, I mean, it's the thing. It's not much because I mean, as I've joked, I have a bit of a hobby of opening up bank accounts just to see what the experience is in other institutions. And you know, yeah, it's a bit of a pain, but you know, not really, right? I mean, now that you got Face ID and all these things, you can do it fairly easily. So you know, I think at the very least, you sort of deserve to open up one or two other accounts for different solutions to at least see what's out there. You know, certainly one of the things that we've tried to do to make the switching seem less intimidating is basically say, open up an account with us, put a few bucks there for a sort of, you know, just to try us. Then we'll try and make other offers to you in the GIC or whatever. You know, it's a big jump to say, move your payroll, all your bills to, you know, open up an account and then move your payroll, all your bills to EQ Bank day one. That's actually there's obviously a fair bit of work in moving every bill and so on and so forth. But you can certainly open up an account, start earning some money, maybe about a sub account for your rental property card or some particular use where we've got, you know, great solutions. And then over time, we hope to be sort of able to get you to slowly sort of migrate more of your banking systems over. I think we found that more successful than saying sort of change banks, which is a slightly different message.
If the cost of switching aren't exorbitantly high, uh, what does that say about the state of the market? Is it that the alternatives right now just like aren't, you know, 10 times greater? Like they're just maybe marginally better, or is it that Canadians maybe aren't aware of the alternatives because they just, you know, they're too busy living their lives to think about it? Like why help me make sense of this idea that the switch costs are low,
Right.
but
Well, I think
people aren't
there is a
switching.
perception. I think there's certainly a perception that that all the banks are the same. The value difference isn't that high, which is kind of interesting, right? Because you see other categories, like say in say the grocery sector. I'm from England originally. We didn't have this kind of response to couponing and always responding to it, special offers in supermarkets. Whereas I think you see the Canadian market is one where people actually value shop quite aggressively. They, you know, they respond to coupons, and the digital version is the same. In banking, strangely, some other countries people do shop a bit more, so shop a bit more in the UK than they do here. But somehow $20 a month just coming out of your bank account doesn't have the same reality as saving 50 cents on a can of soup. And it's an interesting consumer mindset issue, frankly. I think we're all in the fintech community engaged in trying to sort of pull that apart and tease it apart and ask the questions. Whether you see the advertising for people like ourselves, and like Quest Trade, you see a similar kind of messaging out there. So there definitely are. It's definitely not homogenous. Canadians don't care. Canadians do care. I mean, we started from zero accounts in 2016. Now we have over 500,000 customers banking with us, right? So that's a lot of people. But there isn't this kind of pounding. Like, we have to kind of create that tension in the marketplace, ask the question, get people to ask the question, rather than find a lot of people shopping for bank accounts as a regular occurrence. And one of the other challenges, I think, is the savings. Savings next month won't be that much, but the savings over a 20 or 30-year period are really enormous. And same thing, effectively, with, why is the penetration for exchange traded funds in Canada so much lower than mutual fund? And we're still sticking with many really expensive mutual funds, many Canadians, compared to, say, the United States. And that's something that kind of compounds. If you pay an extra 1% over compounding over 30 years, it really adds up. But you don't really notice it over the next 6 months. So maybe I can delay it a bit, or maybe go along and wear it. I mean, there's certainly a lot of, how should I say, suboptimal purchasing of investment products when people go to bank branches, which, I mean, the cost of the investment cost is really enormously important in that space. And yet somehow, again, Canadians writ large are not as sensitive to that cost of the investment, or the investment fees paid. And so a lot of that's kind of basically how the marketing's being approached and so on over the years. I think it will change. The exchange traded fund phenomenon is growing in Canada, but still way behind where you see it in other parts of the world.
Right. Earlier in the conversation, you were talking about banking. You alluded to what banking is: deposits, lending. From your perspective, for sure. Sometimes I wonder if that's what your average consumer thinks of when they think about, like, what is banking to them. And it strikes me that sometimes I'm willing to pay more for something, or neglect choosing the superficially better deal, because I just don't want to think about it, and I just want it to work behind the scenes for a long time. Like that's actually what I'm buying. It's like convenience, don't bother me, just work. If we suppose banking is one of those goods, and the service on offer is not a loan, it's not a credit card, it's not all that stuff. It's just peace of mind. Could one argue that our banking structure is bordering on optimal? May not be the most competitive. Canadians might not be picking the better deal all the time, but given what banking is to them, this is actually the optimal arrangement.
That's only can be true with ignorance, right? Like, okay, so maybe I feel big. I haven't really explored how much money the bank's making off me and how much less, how the gap between where optimal is of what I'm paying today, and I'm ignorant of that fact, and I'm happy about that. I mean, it just doesn't make any sense to me, right? The reality is, it's quite hard to understand this stuff. It's really quite hard to understand. It takes like mortgage prepayment penalty fees, MERs on mutual funds, the cost of individual, if you need to send a wire, which most people only need to do once on a blue moon when they're doing a renovation or something, all of these things, you don't really try and build a spreadsheet with all these various embedded costs and try and add it up and go through the math. But it costs you. And, frankly, that's what the proposition you went with. I know that I'm always going to get reasonably fair, very transparent services is exactly what we're trying to do with EQ Bank. So you tell you no fees. You get interest rate on all your money, every dollar, every single customer gets the same rate for the same deposit type. You can sleep at night knowing that you're being treated reasonably fairly. Like, there may be some special promo out there today that pays a higher interest rate than our rate, but you're getting a really reasonably good deal. Like, if you just bring the services to us, and that's how we're trying to approach it, you truly can sleep at night with that. Now, if you want to be a real sort of super hardcore responding to offer type of person, then you will see special short-term rates and start introductory rates from other institutions. And you might be able to pick up a few dollars there and there, but if you were constantly working that system. But I think having a bank where you could sort of say there's transparency around what's being offered everybody's offered a fair deal, it is a great place to be. But I think that fairer deal is quite a bit different than what the big banks are charging today, frankly, for that service. For the vast bulk of middle class Canadians, if you like, vast group of working Canadians could be getting a better deal for the banking system.
Right. You mentioned earlier that it can be challenging to make partnerships work. Presumably, when you're prudentially supervised, it can be hard to be experimental and innovative. I feel like these things ring generally true. But can you tell us a bit more specifically or concretely, like why that's the case? Like what are the obstacles that EQ, for example, has to overcome time and time again when it's trying to do something new, when it's trying to partner with a fintech?
Well, so first of all, generally in our world, if a partner with a fintech, it would be regarded as a third party by OSFI. So we have to meet the third party, our obligations and kind of how we supervise third parties, which actually you can really, if you're a fintech executive, you can open up the OSFI website, you can see what the expectations are on us. So make it easy for us to be able to meet those obligations, I would say, is sort of one of the challenges. Things like anti-money laundering really, really, really matter to us. Like we're not pretending. Don't come in and say you've got a great anti-money laundering protocol, and then we say, well, can you send over your procedures, and then tell us, oh, sorry, they're just still the next draft. I mean, this is existential risks for the bank, right? So it needs to be really, you need to engage knowledgeable people. If you're leading this process of handling money, if you're handling data and some other kind of sort of media emails are relevant, but really think through what the obligations on us are. And then we can have a conversation that makes sense. And don't forget, even for me, if I say, this fintech, I bet this interesting fintech executive had these really brilliant ideas, and I'd like you to integrate it with our system. At the end of the day, it's still going to end up in our compliance department or in our in some other parts of the bank, our tech areas or cybersecurity areas. They're all going to need to get comfortable. And so if I'm bringing in a company that isn't able to meet their obligations, then it ruins my own credibility. Right? I mean, Wise was a fantastic example of a really well-organized company where from the time we decided we were going to integrate with Wise to the time we went live was 12 weeks. Their API dictionary, the way we were able to build their APIs to talk to each other was superb. Like everything was clear. It's always a few ambiguities about what do you really mean by that field and so on and so forth. But we were able to stand that up. It was a fantastic example of a relatively mature fintech that knew how to talk to banks. But sometimes there's others where the idea is great, motivation is perfect, completely aligns with what we'd like to deliver for our customer, that it falls apart on some of these more technical pieces. So this is real. It's not about us. We passionately would like to have all fintechs in our system. The challenge is just kind of how many of them meet this bar we can actually have an integrated, a federally regulated bank that's integrated with that fintech. And quite a few of those that fail to meet some of the standards. So it's a bit frustrating between the kind of aspiration, what we'd like to be doing, and what we should actually do.
Does it? Well, first, if you had to give a ballpark estimate, what percentage of fintechs don't do everything you just described? Go on OSFI's website, figure out all the obligations you have to OSFI, and then make it easy for you to meet those obligations. And then, does that percentage surprise you? Why aren't more people doing that?
I think it's a very high percentage, unfortunately. It's just, I think, unfortunately, as much as I love the fintech community, the kind of the people I want to be with, right? There's still, even though we've been preaching this message, in the kind of move fast and break things kind of mindset and so on. I'm probably one of the few people in amongst that group that's sort of able to communicate this type of message, because often it's fintechs talking to fintechs as opposed to how often the bankers in there really talking to them about what's required. Perhaps just not enough voice there to really move it. I think you do sometimes see people, you see fintechs where, like an Andrew Graham would have come out of the banking world, would understand this stuff, and the bigger, more mature fintechs for sure understand it. Kind of the most simplest in this world do understand it. I think it's more those who've got a great idea that you'd love to see it flourish, that just just are a bit immature in that it suggested something to do with the banking oligopoly. So in our case, it's absolutely not. And if we can bring value to our customers, we would love to integrate more.
I mean, I'm a public policy nerd, so like it it would certainly surprise me. It would make me wonder if I encountered someone who wanted to operate in this space and then be surprised that there are, a boatload of regulations that apply increasingly to you, but also your partners. Like, um, uh, w- what is it about some of these companies that makes them neglect the regulation? Because look, like, if I can just say one more thing, I always try to grow the association. I'm always out there talking to companies about joining. And when you talk about the focus that the association has on public policy, you always hear, well, it's not really a priority for us, which I totally get. Like when you're small and growing, you do want to, invest much in talking to the government. You want to invest as much as you can in building the best and brightest teams and products. That said, I mean, it's one of the most heavily regulated sectors around. You can't avoid the regulation. It has to be important for you. Well, why do you think that disconnect, if I can call it that, is there?
I don't think it's a neglect, by the way. I mean, it's not as though, I mean, obviously you've got really smart people trying to solve some of these complicated problems and so on. So I wouldn't call it neglect or, but understanding that understanding the intensity of the tension and what the regulators really mean is just, it's hard to understand until you've actually been under the regulatory microscope. It's crazy. Like, I mean, it's really, really, it's really intense. Every time our system goes down, we're reporting to the regulator. Why did your system go down? And then what do you do to remedy it? Well, in fintech, well, we went down, we fixed the code, 10 minutes up, later we were out. But what were your learnings from that? What did you do to remedy to make sure that that is what we're expecting, frankly. That's what the regulators expecting of us. So that's what we need to be able to expect of a fintech, which you would, I think, quite rightly say we've got a pretty resilient system here. Yeah, we know we can fix problems. We can put a hot fix pretty quickly. The reality is we're up 99.5%. Should be happy for it. We should be happy with that. But it's not enough. You've got to get back to root cause now. So what was the root cause of our failure? Bring it back to us, right? So I think it's just until you've actually been listening to what the regulators are asking of us, and frankly, sometimes to me it seems unreasonable they're asking it of us, but they are, and so that needs to flow down deeper into the value chain into our fintech partners as a mindset. It's hard actually sometimes, I think, for fintechs to reflect that all we're doing is flowing down the pressures on us. We're not adding to the pressure. If anything, we're trying to protect our fintech partners from the pressure we're feeling for the prudential regulators to make it easy as they can. It can be to deal with us, but they put the regulatory pressure at the bank level is super intense.
Right. Is this why our banking system has a reputation for being as stable as it is? Is this a secret behind everything, or is it something else?
No, it's not a secret behind it. Canadian banking system's been stable since pre-Confederation, since before the founding of Bank CEO Andrew Moor in 1935, since before the founding of OSFI. There's some good structural reasons why Canada is one of the most safest banking systems in the world. So we were gifted that as a nation. It goes back to our political history, the family compact, Oregon for the land, Victoria. That's kind of the reality. Now, we have had good regulation. Whether some of this regulation around some of the operational risk stuff, the party risk management, is actually taking us in the right direction, or I would argue potentially stymieing competition, stymieing innovation, which will hold back the growth and productivity of the Canadian economy, I think is an interesting question. Of course, you can, some failures need to be tolerated. It just has to be the way it is. Otherwise, we can't have any innovation. That's true and with that lack of innovation, then we get lack of productivity, and then standard of living in society falls compared to what it otherwise could be. And that's true in many other areas of life beyond financial services. But I think we probably become there's too much lack of tolerance for anything that might fail at the cost to our society and the cost of competition and the cost in people's pockets, right? At some point, adding another layer of risk management to slow down innovation, put more cost on the system so that more needs to be charged, consumer needs to pay more, doesn't make sense. You're operating a suboptimal industry to serve the needs of the society. The banking industry is already important. Financial services industry is a very important industry for the society, and having operating with a modicum of efficiency is actually pretty important to the society, as well as being safe and sound, right? So I think you have to kind of think about all those things. So I'm not sure we got the balance right. It's a hard thing to really study. Like, what as you put another $500,000 into making things more secure, what are you getting in terms of reduced probability of failure? Is there a payback for that? At some point, there's always some probability of failure, except that we get on aircraft, very occasionally they might crash. We're not hoping not to do that, but we can't eliminate that possibility. And it's the same in financial services. There might be things, but they're not going to blow up the whole country or anything, but they could cause failures that need to be dealt with.
If it is not OSFI, that's the secret behind the success. If it's not the Bank of Canada, is it the fact that we've long had a pretty concentrated financial sector, that we have these large, well-diversified institutions that, by virtue of their scale and degree of diversification, that they can weather pretty much any storm? Like, is that
But certainly
what
part
it
of
is?
so in Canada, we started with national banks who were allowed to set up branches across the country in every province. Whereas you look at the United States, they were mostly the banks were sort of state banks, even city banks, single locations, obviously exposed to the local economic conditions there. Whereas you had a diversified platform across Canada. And because there was probably a relatively powerful banking system, like relatively few banks right from the get-go, with pricing power, some of the oligopoly we might rail against on one hand does lead to a more stable system, right? The question is, in my mind, is not clearly having a stable system is a huge benefit to any country. The question is how much pricing power is granted getting that stability, and what's the right trade-off? And I think that's a tricky question to answer. But I would argue that with 6 banks dominating the system, 5 banks dominating the system, that's probably too few in a system that continues in a large and vibrant economy like Canada's. And particularly when we see them, as you mentioned some earlier on, the products seem to be fairly similar. Like, we're not seeing a lot of diversity of thought amongst those 5 banks. I think certainly that would be the perspective from most Canadian consumers. And so there's got to be things that add value to different people's lives, depending on who they are, where they live, and that kind of thing, that I think could benefit from more competition coming into the market.
Your answer suggested that it's part of the reason behind the success, but it's not the only one. What about the hypothesis that it's dumb luck, like that it's difficult to tease out cause and effect, especially when we're studying the effects of regulatory change in Canada? We don't actually know what works and doesn't work, which would also nicely explain everyone's aversion to change in this country. Like, we don't know how it works, but it's working, so like, let's just leave it alone.
Well, I think it's hard. There's more than one factor. So we have been a successful nation. Canada is a successful nation. It's had good economic growth, attract immigrants from around the world, has a good functioning democracy and law and order. All of those things are useful to having a stable banking system. And I think we have to look at regulatory incentives too. No regulator is going to get rewarded for taking a risk that results in clear failure, even though in actually making that decision create a more vibrant economy and more prosperity for Canadians writ large. So I do think we should tinker with it. We should be prepared to take a bit of risk. And as long as we're sharing and having a national conversation about the additional risk that's being taken, and the regulator is taking their responsibility seriously, given that we made a deliberate sort of democratic decision to take more risk, I don't know that you could pin any blame on that group of regulators or that regulator for doing it. Now, I know that's a hard kind of political trade-off to make, but fundamentally banks are political beasts. We live within the scheme of a democracy, and it's not entirely unreasonable to me that we would be explicitly making that trade. It's sort of, from Parliament's direction to us would be to try to create a more competitive environment for the benefit of the prosperity of the country, recognizing that as they do that, things might, at the margin, be slightly more risky. I would argue that you can move quite a long way before you put more meaningful risk on the banking system. But either way, at least having that explicit call, that was the decision we made. And that's what's best for Canada. And probably you're not going to have any failures. But clearly, if there was a failure, there would be a lot of kind of name calling and so on. But I think as long as we sort of, in Canada, we're pretty good at actually getting a consensus together. We as a group all agreed this would happen. And we had checks and balances and things started to grow. And actually the cost of failure wasn't that high. And the benefits that we got from it were high enough that it was worth that. We are a more prosperous society as a result of being a bit more entrepreneurial. I don't think that's an entirely unreasonable. I mean, I know it sounds ambitious, but I think you can open it out. To me, there's been no national debate on banking since 1998. When Paul Martin stopped the merger with banks in 1998, that was the last time we were really talking about the structure of the banking industry. And in the meantime, there's a whole bunch of prudential regulations come in that's changed the competitive landscape. And we're not really chatting about that. That kind of Basel III, we're just imposing international norms on us. We created the DSIP designation, resolved the global financial crisis, and just let things roll. A lot of smaller banks disappeared in sort of the 1990 period, and the market share got gobbled up by the larger institutions. Is this leading us to the back? Where's this all going to leave us over the next 20, 30, 40 years? And is that going to leave Canada in good shape in terms of having a good financial system that can, help start new businesses, help form family formation, help prosperity of the country, deal with the kind of financing, the kind of green initiatives that we hold there, and all the things that are important to us as Canadians.
I want to take us a little further back than 1998. Some of your answers to me suggest that you are, a banking history buff. Canada had this period of free banking, relatively little regulation. Banks were issuing their own private money. You can read historical accounts of this relatively free Canadian banking system, even helping out our neighbors to the south who were riddled with banking crises. What do you think made free banking in Canada work so well? Was there like a culture of banking that kind of pervaded all the big institutions? Was it, effective competition and checks and balances? What was it?
Well, I think there was a political consensus that pulled it together, right? I mean, I can't remember what the name it was in Quebec, but in Quebec and in Ontario, it's Upper Lower Canada, in those days, we were talking about kind of the family compact having control. So although it was free, you had to be aligned with the political consensus. And it's a bit like even, how I would perceive banking was even 10 years ago, or even through the global financial crisis, or even today, frankly. If there's a crisis, we get together and pull things together. We believe in building leading Canada solutions and not allowing things to blow up. And I think that was probably always the attitude, frankly. Pre-1935, if there was ever a problem with an individual bank, what did you do? You called the CEO of the Bank of Montreal, and he called the other bankers, and they solved the problem. It wasn't like we didn't have banks in distress before then, but there was kind of responsibility to Canada that the Bank of Montreal carried on its shoulders. And then the subsequent Bank of Canada was started, no need for them to do that anymore. Like that was then handed over to government entities. So we figured it out along the way. And it is a little bit, I find it interesting that we're moving more to a US style regulation. It seemed to me in the past, we can have really free-flowing conversations with OSFI and with other important regulators in the room and the bankers. Some could argue that's a sort of bit of a banking cabal, potentially undermining the independence of the regulator. On the other hand, I didn't really find that. I found that those are really sensible, constructive conversations around, thinking about how NHA and BS works in Canada, or to what extent can it be a useful HQLA asset. I mean, we're getting into banking geekery here, but these are conversations where senior level bankers working with senior level regulators having sensible conversations in the room seem to me to lead to a better banking system. The US, my sort of perception is, I think it's a completely different environment, right? You've got 4,500 banks or whatever it is. You pick up the rule book and figure out whether or not it's allowed by the rules. If it's not prohibited by the rules, you kind of do it. In Canada, it's a bit different. It's sort of, I certainly have open dialogue with our regulators, but this is what I'm thinking about. Reverse mortgage is a great one. I think reverse mortgages are a great use case to some people. They're not a great, they're a great use case for, in many ways, the single person that's now maybe lost their spouse, living in a certain community, can stay in their house for another 5 years. There's a lot of benefit in aging in place. But the regulation at the FCAC doesn't really deal with reverse mortgages, but you can have a conversation with them and say, this is how we're approaching it. This is how we're making sure that people get good independent legal advice, even though they're aging people and so on and so forth. And, and understand how this is approaching. And you can kind of have a bit of an odd link and sort of, yeah, we kind of understand that. It's not to say that, they still would hold us to account if we were behaving poorly in that regard. But it's a small enough community. There's only 2 or 3 of us in the reverse mortgage business. And it's a small enough economy where you can have that conversation. And I think actually, to some extent, we benefited from that, that sort of sensible approach. And I think we are moving to a bit more of a rules-based American type attitude, which I'm not sure is actually necessary for this country. I mean, let's face it, there are 6 big banks in Canada. You can have them all sitting around the table, and you've got all the key influences to the things that are really going to cause systemic problems in the banking system. And, whether it's the governor of the bank or the superintendent or the deputy minister of finance, you say, team, this is what we're doing. And frankly, there's enough moral suasion there in the room to make it happen. That is our reality. And it's an advantage to Canada. Let's think about our competitive advantage. So we may be less competitive, less diversity of banks, but we do have that competitive advantage. So let's use it to navigate our financial system in a way that's sort of sensible and we can sort of buy into.
What's motivating that change to what you describe as a more US style rules-based approach?
Well, I think it's the fact that we're imposing international standards on the Canadian banks, right? So it's interesting, right? Like when you think about things like Basel and so on, which admittedly we have to sort of stand up and say Canada stands up well when measured against those measures. To some extent, we've been reluctant to adopt Made in Canada solutions and veer from the international standards. Some of the standards may be are being adopted because they sort of work in banks around the world, but doesn't really consider our unique circumstances, which, as you were talking about, we came from a free banking world and somehow we've always done fairly well. So that tells you there's something about it. It doesn't necessarily mean adopting international rules writ large. Actually, is actually necessarily the right answer. I'm not saying that some of these rules are good, they're good ways of measuring things and so on. We should be learning from that. But I think you also should be looking at what's in the benefit of our country and thinking about that. I think we've been a bit reluctant to break away from that to be independent and so say, we have these unique advantages in Canada and we're going to kind of continue to ride those things.
Things like Basel have resulted in more harmonization across a lot of these countries. In the long term, do you see that trend being undone at all? Could anything happen to reverse it?
Of course.
Even Trump's election.
Yeah, well, I think a US election might undo it, right? So, I mean, you've got less international cooperation going on. Obviously, global tensions between, say, China and the US and so on seem likely that at least the next few years will be in a period where there's less international competition, less international cooperation. I'm hopeful that over the years ahead we'll realize there's lots of things we need to cooperate, whether it's climate change, and frankly, banking's the same. While on the one hand, we're been politically more apart globally. On the other hand, we're all moving around the world. We've all got relatives in other countries. Well, many of us are sitting in Canada. Many of us have got relations in India. I've got lots of relations in England, Ireland, China, and all these places. So it does seem that we will probably at some point realize that we actually live in a kind of global village, and we all need to have these kind of similar rules, rely on banks to behave in similar ways. So, but I think for the next few years, it probably will start to become a bit more splintered. It's a bit of a challenge for us, to be frankly. How do they respond to a US government that's so anti-regulation or in a deregulatory mindset? What does that mean for the competitors, Canadian banks? How competitive do we want Canadian banks to be in the United States market, for example? Obviously, that's kind of a real issue based on some of the things we've seen more recently. So, there's some interesting challenges that are maybe coming up.
I love that at the outset of the call, you talked about OSFI, because there's always a lot of talk about open banking and real-time payments and how that'll make the financial sector more competitive. But I feel like there's not a lot of talk about the role that prudential supervision plays in all of this. What are some things that we could change about how banks are supervised at that level to promote more competition between banks, but also make it easier for banks to partner with fintech companies?
Well, things like, I talked about third-party risk management. One of the things that I've chatted about internally and that we'd like to sort of sensitize more is there a way somehow we could have a sort of national certificate, some kind of certificate on a fintech that says this meets OSFI's third-party risk management standards. So you could now go to every bank in Canada and say, that there are various parts of that expectation that are being audited by a third-party firm, and we all agree that that meets OSFI standards, for example. That would make it easier for a fintech then to sell their services to every bank in Canada. So I think there's many things that we could do in a constructive way to sort of think about how to fit into the regulation more easily. And then I would say, okay, well, the cost of working with that fintech is going to be half the amount of working one that doesn't enjoy such a certification or whatever it is. And then there's just helps make the business case work, helps show that these firms have really got sort of the guts to them that we need to rely on.
Do you think initiatives like retail payment supervision being curated by the Bank of Canada, open banking accreditation, which will be overseen and performed in some capacity by the FCAC, do you think those things will help?
I mean, maybe, but I must admit, just to be clear, I'm an open banking advocate, have been for a long time, love it, think it's a great idea, it's the direction we should be going in. Payment systems in Canada are a national embarrassment, we need to fix them. I'm just depressed about the lack of progress and where is this open banking czar that has conviction about making it happen, recognizing on the one hand there's regulatory standards we have to meet, but has conviction about we need to make it happen. I think just haven't seen it. You need somebody who can bash heads together, has the authority to believes in the endpoint in the journey and could get us there. And I just don't see that. It feels more like a kind of bureaucratic process that just slows things down for another year or another 2 years. And if you're a fintech, you can't afford to wait around for 2 or 3 years. And if you're a bank, maybe, okay, if you're a bank, well, the mortgage business is going to continue to spit off earnings. And if I got to wait 2 or 3 years for that, it's frustrating, but my business, I have a business. We need fired up entrepreneurs thinking about the opportunities offered by real-time rail or offered by open banking. And frankly, I think there's been lots of people that were excited about it 5-6 years ago. It's coming. Trying to create business players, trying to raise capital, all the things required to set up a fintech. And what have we done for them? Not enough. Just not enough. Need to push on that. And Canadian consumers are suffering as a result. It's not just the entrepreneurs that couldn't get business off the ground. As important as that is, it's Canadians are suffering as a result. So no, bottom line is I have a low optimism. That's the right place to park it. Now it's good that it's good that you identify something, and frankly, this new head of the FCAC, so I gather comes with a strong reputation as somebody who can sort of manage things effectively to make change. And I think who actually is heading up this various agency really matters for the time of that. So hopefully, I always live in hope, and we always like organizations like yours do great work in trying to promote this agenda.
Well, just to see if I can make your blood boil a little more, the real-time rail, being built by Payments Canada, the organization the government created in the 1980s, lots of hope has been pinned on this thing for competition in banking, for competition in payments. My question to you, based on everything is this thing going to be, a boon for competition, or more of like a incremental improvement, or nothing at all? Because the system has just been destroyed by incumbents.
It's being destroyed by incumbents. It's absolutely dead as a pro-competitive force. It's a disgrace. It's unbelievable. It's unbelievable. It's really just becoming a settlement mechanism underlying Interact. Like, which is remind us all it's owned by the big banks. Like this was to give hope to payments. And that's a hope that's now being crushed, I'm afraid.
Where did we go wrong? Like, when did things just start going really poorly? We had a vision, everyone was excited, and then something happened and we ended up here.
Yeah, I don't know. We've been watching it pretty closely. We've had people represented on the board, on the MAG. I do think, again, having somebody that could really push it through against the obstacles, it seemed that there was too much stakeholder engagement and not enough. You want to engage stakeholders, but you also need to set a direction and a pace that everybody knows they need to get on board. I don't think that was done. And these things always become complicated. Is it, you don't really want it to happen because of competition issues. And and there are real technical issues to get solved. So you lean on the technical issues to slow something down, stop it from being, fully born. But it's really disappointing. And a real, this is a real issue. But this is, our payment system is bad, and to even when we get to the first major real-time rail in somewhere in 2026, it's going to be far from delivering what we need to be delivered. How is it that we've got worse payment systems occurred in so many other countries that people would regard as having less advanced financial systems? It's beyond belief, really.
It strikes me that this is a governance problem, and it's not just governments or governance of Payments Canada. I think it's governance of the payment system overall. You have a concentrated banking sector, a small number of banks that have a lot of influence in Ottawa, first and foremost, at Payments Canada, at Interac, where they're major shareholders, and even in the credit card networks, for whom the big banks are probably the most important customers. That's a lot of influence over all the key decision makers and decision-making bodies that make up our payment system. And you have these banks making a lot of money on the issuance of credit cards, for example. Why should it be a surprise that this new system that's going to bring about new payment instruments and competition, why should it be a surprise that this thing is going to go off the rails when the people who have entrenched themselves in all these different places have no incentive to challenge what is already a profitable business line?
But I think that's sort of the root of crime. By the way, so many friends are in the other side of the industry, in these big banks, and so it's not as though they almost have to do nothing, right? I mean, you just sort of raise a concern, and then nothing happens. So, which leaves you in the incumbency. It's not as though I would believe there's a sort of, there are a good group of bankers just running their businesses, and they can raise an issue about a technical issue or potential failure of the system or an uptime issue, and then it immediately stops everything in its tracks, as opposed to they'd be quite right to raise those issues, but then the immediate response from some stronger leadership at the center should be, okay, we hear you. We're going ahead anyway. We don't, we hear you. We're going to resolve the issue this way. This is the way it's going to get resolved. There may be a few glitches early going. And what I know about every time you stand up a new system, there's learnings in the early going. You launch as an MVP, you get going. I mean, that was one of the things that strikes me as odd about the real-time rail. It wasn't as though we were turning off another system and it had to go live day one. It had to handle all the traffic day one, or otherwise there'd be an actual crisis. We could have been running it in parallel for a long time and just slowly loaded it up as we were building the capability on it, learned to make sure that it could get there. It was actually a relatively low-risk system. And so, it's quite bizarre that the whole thing's been sort of shunted into a siding where it now sits and won't drive much value for us. It's really quite, unbelievable. There's obviously some other institutional things. We have rotating leadership in various groups, so no individual really owns it. It's not as though, I come every day trying to be fired up about how can I make Equitable Bank, EQ Bank better for our customers, for our employees and our shareholders. When you're thinking about setting up national infrastructure, you can't really kin that on anybody. But, we built a railway from Vancouver to the Atlantic Ocean in 4 years, and we can't stand up open banking in 6 years. Real-time rails failed in 8 years. And, they're now talking about MVP another 2 years. Like, what the hell are we talking about? It's surely easier to cut a bit of code than it is to build some tunnels through the Rocky Mountains. I mean, this is the craziest thing. Like, we're Canadians. We should know how to hew out prosperity on this tough tundra that we live on. For God's sakes, we can't set up a bit of code that's already been done in other parts of the world, by the way. It's not as though we're pioneers here. I mean, even in the United States, they've got Fed now, right? Like FedWire. Why is that? Like, really? This is unbelievable. It goes back to my point. One of the national benefits we should be having is that we're this sort of cooperative society where we should be recognizing what's in the greater good. And clearly a good real-time rail, modern real-time rail is in the public good. And it seems to me with the right kind of leadership, and I don't quite know who feels they really own it. I think that's part of the problem. we could have got there. Maybe I do think probably the bottom, the top of the house is got to go live with our democratically elected representatives. I mean, they have to be the people that really need civil service and the mechanism to say this is important to them. And there has been a bit of that, but it comes in fits and starts. You can't have fits and starts. You've got if the minister was going to report on the progress of the real-time rail every week, you would have moved faster.
Yeah.
Who had the tensions.
I've heard a bunch of ideas for how to fix this. I don't know if any of them would actually work, but one of them is, the minister needs to take more ownership here. At the same time, if I were advising her, I'd say you don't. The program's been a shit show, and no matter what you do, you're going to piss someone off, and you're not going to really get anything politically for this. So it's like a lot of risk. You're going to anger a lot of stakeholders, and you're going to get nothing in return. So don't do that. Some other ideas I've heard is, change Payments Canada's mandate so it can compel and doesn't have to, do what it's being pressured to do by some of its largest members. Another idea I've heard is blow up Payments Canada, enhance the Bank of Canada's powers as a payment system overseer. So it's not just supervising payment systems to preserve financial sector stability and all that. Has a mandate to promote competition, think about end user interest, and it can boss around the different payment systems as it needs to. Which idea are you most partial to?
I think fundamentally this is in the political realm. So, it's tough for politicians to put through things that are of the longer term public interest at the cost to a few noisy people where it's not in their interest. So I recognize that political reality. And I'm not a politician, so I don't know how you square that. But that's how you have to solve it, isn't it? You have to be seen as being on the side of the people that vote for you so that you can overpower the other interests that might be trying to vote this thing down. And as I say, I'm not a politician, so I don't know how to solve for that, but I know that's your responsibility. If you're the elected representatives in a democracy, and there's these kind of geeky things and call it like a real-time rail that's interesting to you, interesting to me, interesting hopefully to many of your members, and in the broader, we know it's in the public good. And partly I think you do a great job and others do a great job in the fintech community trying to communicate this, of what's the advantage going to be for Canadians. But the elected representative need to stand up and force this down. I mean, they control the leaves of political power. That's why we vote in office. It's tricky. I mean, let's face it, we have had COVID and we've had a bunch of other things we had to deal with. So I'm not particularly critical. I think the politicians super hard. Jerry, I would meet with politicians on any of these issues. They're much more engaged and around it and fluent about it than I would imagine based on what you read in the newspapers. And it's hard to make these things work. But I think that's what you do see in other markets. Frankly, you see in some markets like in Australia or open banking, kind of the equivalent of Chancellor's jacket just to say we're going to make it happen. We gave enormous authority to something to make it happen, and it happened. I think it's the treasurer. I think it's the guy in Australia, but we're going to make this happen. And then, frankly, if we as the banks knew it was going to happen, and we were there to lobby, it's going to happen, but we want to try and make it in a way that's as efficient as possible for you. Then we start to approach things entirely differently. Okay, we know how to get this. We know how to get the testing cycle down by 4 weeks. Because by the way, if we say 4 weeks of testing cycle, all of a sudden I've got 100 people on, don't need to be testing for another 4 weeks, and take some cost out of my system. We're pretty good at math, and we're pretty good at running programs inside the big banks. If we know we got to do it, we're going to go and do it, right? So, it's knowing that the steamroller is coming at you. There's nothing you can do to stop it. So now you're going to force to deal with it, and I don't think we felt that. And then frankly, even within the banks, it's more complicated than you think. I'm on the board of the CBA for a Community Banking Association for a number of years. Different, it looks like a monolith from the outside, but there are different banks with different ideas. And again, that takes political trade-offs. Sort of that somebody kind of in the political realm can sort of say this bank's supportive, and there's sort of a trade to be done here around all their support for real-time rail. It's a diplomatic process. I'm not saying it's easy, by the way. It's hard. It takes conviction. It takes time. All those things. But these things are worth building. Like nothing was built easily, right? Anything worth doing is hard, and this is worth doing in my view.
Last question, and maybe the most important. I'll leave that to you to judge. There's going to be an election in 2025, unless we go to the polls sooner. Polling suggests there is going to be a change in government. So suppose there is. If you were tapped to be this next government's chief advisor on financial sector policy and you wanted to do that job, what would you tell it to do?
Well, it's interesting. I would tell it to try and create a national conversation about the structure of the industry. Actually get out there and explore these things. Don't listen to what Andrew Moor thinks is sensible, or frankly, what the CEOs of the big six think is interesting. Make this a national conversation about understanding that a good banking system is really important to the country. And having done that, then take action on what you hear about that, so that you've actually created a political license to make the changes that are necessary. It may sound like, okay, we're going to have a bunch of meetings, first of all. Yeah, I think we need that, because I think we actually need to have more people like you, Alex, that are sort of thinking about the public policy piece and so on, and then make it happen, right? And that's so. Frankly, there are a couple of good people within the Tory caucus that are talking about these issues. A lot of fluency on open banking, and a lot of the Tories certainly seem pro-open banking, as the Liberals are claiming to be. And frankly, I think this is something that also would appeal to an NBP cause. Like, this is pro-competition, looking after individual people in Canada, which surely appeals to. I don't think it's a political left-right thing. Frankly, it's about creating an infrastructure that we can all agree on is likely to lead us to a better place. I mean, presumably a Tory government would come from more of a pro-competition angle. But when you think about competition in what's already an oligopoly, how do you inject competitive tension into an oligopolistic system? And you be kind of thoughtful about how that happens. It's an open banking is one of the ways of doing that. Similarly, if you're presumably you're sort of on a left bent, you want to help inject competition for different reasons, give individual Canadians a better shake. Both. It seems to me these are kind of issues that are universal across all political stripes. I don't think we can really debate it as a kind of left-right issue. It's more about political leadership than it is about that. So I'm, certainly current government talk a good game on open banking. We haven't seen the delivery, from my perspective. I would love to see more. There are lots of really knowledgeable people in the government who understand this stuff and want to move on it. So lots of knowledgeable people in the banks and actually in the kind of public policy think tanks too. They can all help us get there. We do need to step up our game there, for sure. There's a long way between what we could do, where we're going.
We're going to pull every string we can and try to get you into that role, Andrew. Thank you so much for taking the time to talk to us today. And that's a wrap for this episode. Thanks for joining us. If you're looking for more, visit us at fintechscanada.ca or follow us on LinkedIn. See you next time.